What's happening, people? I go by the name of PE ratio. PE ratio is this price earnings ratio. That's what it's short for. I like the name because it's pertaining to the stock market, and I think everybody, if you're going to get into the stock market, you should know what a PE ratio is. So let's get started. I'm covering the stock Block Inc., formerly known as Square. So let's get to it. I'm going to share my screen, so y'all bear with me for a second. Here we go. So um, I use a lot of subscriptions for the stock market, and one of them that I like is Motley Fool. I use Motley Fool. I use Yahoo Finance, Bar Chart. There's many of them out there. I've researched them. People like what they like, but I get a lot of research from these Motley Fools, especially Bar Chart. I think it might be better in many aspects, but this company Block, this used to be called Square. Square was just this is what it is right here. So this is why I like this. Let me see 1 second. So Block Inc. What is Block Inc.? This is the overview. It's Motley Fool. And of course it's subscription. It's about $40 a month. Maybe a little less than that. But hey, if you're gonna be in my channel, you can have access to these some of these subscriptions, and well, not access to them, but you can as I'm covering them. So Block Inc. is a technology company that provides innovative solutions for businesses and individuals to manage financial transactions. You just swipe them in Square. You just swipe. They're getting more advanced now. I'm going to take y'all to the website also because so you can see what the product is. You don't want to invest in the company. You don't know what the product is. All right. The company offers a range of hardware and software products designed to facilitate card payments, analytics, and financial management. Block Inc. operates globally, serving markets in the United States, Canada, Japan, Australia, and several European countries. Y'all gotta excuse me. It's cold where I'm at. Um, this is Oregon over here, so I got some of the sniffles, but y'all bear with me. Okay, so products and services: Square point of sale and related software, Cash App for personal finance management. So as you can see, it keeps saying Square. So Block owns Cash App. Um, Hardware solutions like Square Terminal, and I can't see the other one. So here is the company is Block Inc. It's on the New York Stock Exchange. That's what this stands for, and that's NYSE. The stock is trading at $88.55. That's what it's closed at today. As you can see, this is November 29th, 1:59 p.m. This is what it closed at. Okay. The market capitalization. This is the number of outstanding shares that a company has times the stock price, and that's how they get this market cap. We're gonna get more on this later. This beta right here, this is important. So this BETA measures the volatility of the stock market, volatility of this stock compared to the stock market. You want to have a beta of less than one. If you don't want it to be too volatile, meaning if you don't like large price movements like Block, it could move $10 in a day, maybe $8 in a day, maybe more than that. If you don't want to see that, if you can't stomach that, then I suggest getting companies with a lower beta than this. That's what this stands for. So, and I could I'll as I'm teaching my courses, I have courses, so y'all ask about my courses. But right now, I'm just doing this. This is free content um, for right now, so just bear with me. This is my business. I love covering the stock market. Okay, let me stop sharing for a second. I got to go back 1 second. So here, 1 second. I want to show y'all something that people don't really show y'all. So you don't want to invest in a company without knowing if the company is making money or not. That's rule one. That's rule number one. Before you invest in a company, find out how is the company investable. What I mean by investable, okay, is the company making money. If a friend comes to you, you can invest in. Just think of investing as investing in private businesses. You can think of investing as even investing in something like a lunch truck. If you have a friend that has a lunch truck, and then they come to you and say, "I need about $30,000," and you got $30,000 on hand, what's the question you're gonna ask? Well, is the company making money? Why would you want to invest in him and this company not making money? So you're just going to spend your money and that's it. That's the end of that. But he or she wants to use your money to make more money. That's just what investing in the stock market is. They want to use your money to make more money, to invest in the company, to grow the business. So a lot of times when you invested in the company, you need money for the products and services to buy different products such as a lunch truck. You need to go buy another lunch truck. She may need 5 lunch trucks, 5 more. So she want to borrow your money and still be able to pay bills monthly because bills don't stop. So anyway, Block in 2021 made and you got to multiply these. You got to multiply these by 1,000. Unfortunately, that's how they do it. I guess because they can't fit the whole amount of money or revenue in that little space, so they kind of downsize it. So this is 17,661.2. That's what I'm looking at. So you multiply that by 1,000. What is that? Okay, you just add the zeros. That's just. Let me just do it by the calculator. Okay, so you got 17,531. No, 500 and. Just bear with me. I'm on my other calculator. 1 second. I don't like this one. 1 second here. So we got 17,661.2. You multiply that by 1,000, and you got 17,661,200. So they made 17 in 2021. They made $17,661,200. And in 2022, they lost a little money. You're supposed to be growing your revenue annually by 10%. That's what investors want to see. That's what they used to like to see. But we're in a different economy now. So I think that they're using maybe like if the company is growing 6%, 7%. I think the experts are a little bit more lenient when investing now because of inflation. COVID happened. When COVID happened, it just kind of screwed a lot of stuff up. So in 2022, they made $17,531,600. Okay, they lost. Now in 2023, they made $21,915,600. So whoa, they're getting back on track. And right now, time to mature. That's right now. That means right now. Their revenue because the year is not over yet. So this be in 2024. So year to date, right now, they grossed $23,861,500. Okay, that's this total revenue. So their revenue is growing. So you say, okay, are they investable? 1 second though. Let me show you something else. Okay, let me go here. So I'm gonna share this again. So this is the income statement I was reading. That's money coming income statement. Everything's on the income statement is is money coming in. What else? Let me just show you this. This is all on the income statement. Cost of goods sold, how much it costs to pretty much do business, or the cost of the goods that they sold, pretty much what they do business. Gross profit, you know, that's how much the company profited. So they could have made revenue, but after expenses like cost of goods, right? So this is the gross profit, and I think that this is the total revenue minus cost of goods sold equals gross profit. Let me just make sure. Let me do the math. 23,861,500 minus 15 million 342.2 equals that is exactly what that is. So y'all don't have to. So this is the total revenue they made minus this is expenses, pretty much cost of goods sold. Now this is the gross profit. This is gross profit. So 15 million. So 8 million. Yeah, 8,519,300 is what the company profited. So and the numbers are better to deal with. Hey, but look at here. See, even though the revenue of 2022 dropped from 2021, look at this. They still profited. See, you see, they still profited. So they profited almost $1 million more, a little over $1 million more than they did the year before. Remember, it's about what you make, but more importantly, how much you can keep. You see what I'm saying? So they've been profiting every year. This is 4 million this year, 5 million 2022, 2023, 8 million they profited. Um, now to 2027 million they profited. Now this year, and it's not even over. They profited. They're at a profit of 8,519,000 point three. I got to break all this down in the class. But anyway, look at this total operating expenses. This is on the income statement. Okay, let's go to the balance sheet. Let's bear with me. Balance sheet. Okay, let me just 1 second here. So this is the balance sheet. Okay. So in 2021, let's see here. I'm looking for, excuse me, tax assets. I'm looking for something. I was looking for this is the balance sheet. So it's supposed to have the total net worth of the company on here. But I don't see it on here. This cash and equivalents, short term investments. This is how we analyze companies. Like we got to go through this is what you call the financials. You got to go through it. You know what I mean? So let's see here. I don't see what I'm looking for here. And actually, sometimes I like Yahoo Finance because it shows me more stuff. Just bear with me, y'all. Okay. Let's see here. Um, okay, let's go to Yahoo Finance. Let me get out of this again. 1 second, y'all. I'm going to block. Remember, I'm going to block. Okay, let's go to block. Yahoo Finance is a little bit better to show you the financials and stuff. Um, Come on now. Don't do this. Um, okay, don't do this. I don't know if Yahoo just changed their stuff just overnight or something. Hold on one second. This is and now it's pissing me off because if they changed something, I didn't know that they changed it. I don't know. I don't know what Yahoo's going through right now. 1 second here. They're pissing me off. Man. 1 second. This is oh, here. See, I don't know. This is what I'm looking for. You see this over here? I don't know what's wrong with Yahoo. I don't know why they what was going, but I'm going to financials. This is www.finance.yahoo, and I want to go to the financial section. Okay, so I'm going back out. I'm gonna type in the company financial. Come on, financials. I wish I could do this without the screen going black, but hey. Um, so just to show y'all that it's legit, this is why I like Yahoo Finance. Um, it's the same thing as we were seeing over in Motley Fool. As you can see, 2020, this company made they have it better here. So it's 9 million. This is how much the company made: $497 million in 2020. So y'all can see they could fit this in here. If it's a billion, then you just gotta multiply it by 1,000, and they would tell you that up here. All numbers are in thousands, thousands. So they'll tell you that up here. 2021, the company made 17 million, and we already went through this. Remember, total revenue minus cost of rev. See, Motley Fool has cost of goods. Here they got cost of revenue. So they kind of, play with the terminology. Gross profit, 8,600, 603,390 dollars. So they've been profitable every year. So I want to show you the balance sheet. The balance sheet. Okay. Balance sheet. Where is it at? Company's balance sheet. So you always want to see, this is total assets. This is the balance sheet. They got cash flow, dividends, etc. They lock the dividends. You got to pay extra for that. Ooh. All right. Total assets. So this is assets is hold on one second. Something else. Total assets. I'm looking for, it should be net worth. Okay. Well, total equity. I guess they rewording it. So assets minus liabilities would equal the net worth for the company. So they changed this. It used to be total net worth up there, but anyway, from what I remember, so total equity gross is how much the company is the equity of the company. This is huge. This company should be doing better than it is now. Should be worth more, but investors invest in what they want to invest in, I guess. But this looks like a good company. See, it's been growing its assets annually from 2020 to 2021 to 2022 to 2023. So it's 9 million here, total assets. Then you got 13 million. Then 2022 they jumped up to 31 million in assets. 2023 not over yet. I mean, they made 34 million, and 2024 is not here yet. So total assets minus liabilities would give you this total Total liabilities will give you total equity gross minority. That's what that number is. This is what this number is. It's total assets minus liabilities equal to net worth. But they said total equity gross. Okay. This is balance sheet. This is telling you they got this. They had a total debt on here. This telling you how much company the debt. I mean, how much debt the company has. They have 3,493,427 dollars in debt of total debt of the company. This is 2020, so 2021, 5 million in debt. 2022, 6 million in debt. 20, etc. Now they have. Let's go to cash flow. Just because it says debt, that's just sometimes the company they don't want to pay off the debt, but that doesn't necessarily mean a bad thing. It's just saying that that's how much debt they got. So that debt is growing a little bit, not nothing to be worried about. Let's go to the cash flow. Let's go to cash flow. Okay. Here we back. Free cash flow. 2020. See, they was hurting. It was a bad year. A lot of people passed. God bless them. Uh, COVID happened first and foremost. See, you could get money back, but you can't get your life back. So, you know, them being negative like this, they get it back. So they jump back. Here you go. 2021, 534,000. That's free cash flow. Okay, 5,000, and I think this is multiplied by 1,000, but I'm not sure. So free cash flow negative 50,190. So they was in a negative, but look at here. Now they back. Everybody's is in full swing. Everybody's buying stuff. $716,979 in free cash flow. Okay, I think that's more than the debt that they were having. If you go back and look at the debt that they had, um, so let's go back here. So see the total debt. Well, dang, it's 6 million. So anyway, they got some debt, but as long as the debt don't get out of hand. So this is how I analyze companies. Let me go back to Motley Fool for a second. I don't want to take too much of your time. Here, let's go back to Motley Fool. So here's Motley Fool. I want to go over the chart real quick. Bear with me. Here. Actually, let's compare the. Before I do that, I want to compare the cash flow of the company. Let's see if Motley Fool had that in the millions. Maybe they don't. Anyway, let's go back. Okay, let's look at the chart. Okay, just 1 second here. Come on now. Okay. Summary. Yeah, all that good stuff in there. Let me see something here. I wonder what happened there. 1 second. Just 1 second. Let's look at this chart right here. Okay. So look at here. This is the chart from left to right. You read the charts from left to right. From 2020 on to 2024. These charts, I like my charts to be going smoothly up like that. So this is a choppy chart. I'm looking at this chart and it just charts tell you a lot. I like to see my chart going like this and then like an up trajectory. Okay, I like to see that, and I don't see that here. So let's go back and let me show you something here. Um, if it stays there, I don't think I can show you the chart in the Okay, we got prices right here anyway. So this is in 2021, 2020, 2021, 2022. So you got $10, $50, $100. This is the stock price. So as you see in 2020, this is probably like March. The stock dipped below $50. So this looks like it's about $38, something like that, right? $38 a share. But right when that dip came in 2020, this is the time I made some money around this time because I know that the bottom, the support level, the correction. I'm like, yo, this is the bottom. So stocks can't do nothing but go up. Yeah, they could crash a little bit more, but it was so big that I'm like, yo, this. And just for me understanding the stock market and watching it, I'm like, yo, this is a good time to buy stocks through a market crash. Warren Buffett said you buy um, when everybody you buy when there's blood in the streets, meaning you buy when there's red. When there's a lot of red, in the market. You know, so this is when I bought right here, and I just wrote it up. Still in 2024, it went down. This is probably the lowest, but it still didn't go past this. So even when you bought right here, it still didn't go past this. It's still up, but you don't know. So sometimes you probably want to sell. When you're up. So this is $38. Let's say I bought 100 shares for $38. Come on now, this thing hit $270. So if you had 38 shares, right? Let's do the math. If you had 100 shares at $38, that's $3,800, right? Let's do the math. Let's make sure. 38 times 100. It's 3,800. Now say you bought it right there, and then the stock went here to like just like probably like 270. All right. So let's say you had 100 shares that should be 27,000. 100 shares times 27,000 270. That's 27,000. 38 from 3,800. Let's do the math. 27,000 minus 3,800. So you profited $23,000. Okay. And let me tell you something. Stocks don't grow astronomically like this in time. So sometimes they got to pull back. Like right here, you see these little dips. That's a pullback. It goes up, it pulls back, goes up, goes up, pull back a little bit, goes up, pull back. There's a pullback. Goes up right there. See that right there? Boom, pulls back. So there's a lot. Stocks don't just go straight up. Look at here. Goes up, pull back. Goes up right here. Boom. To like this is 150. So it's like 170 maybe. Boom. Dropped to like what 140. Went back up to almost they would call these support lines. And I ain't gonna get too much into that because I've already been going long, but I just want to get a good coverage on this stock block. Don't be greedy. You made a $23,000 profit. Take some off the table. At least take your money times two back. So if you had put 3,800 in there, shoot, take 7,600. 3,800 times two is 7,600 if I'm not mistaken, right? 3,800, 38 times two, right? Times two. Yeah, 7,600. At least take that out. Me, I'm taking half. I'm taking half of the 23,000. What? Yeah, I'm taking I just made off of $3,800. I just made 27,000. Yeah, because I know now, I know better that you should take some off the table. And me, I'm going to take half. So I'll sell 50 shares. Put that. Now my new bank account is a little over what 27,000. So what 13,500. Let's do the math. 27,000 minus half, minus minus divided by two. Let's just say that it should be 13,500 divided by two. Yeah, 13,500. So, bam. Um, that's what it is. So I'm gonna leave this stream. My battery's about to go dead, and hope y'all enjoyed this. Okay, peace.